Good afternoon and welcome to Boom, Boom and Zoom. I'm Paul Ricker and of course I'm joined by Peter Switzer. Peter, how are you?
Good, man. I think you might have got it right today. You boomed in Zoom. Did you get it right, or just put any?
Possibly,
Right.
possibly. But I'm a slow learner, but our market,
A good learner, but a slow learner.
market not too far off its all-time highs. Let's
Yeah.
get to the important information and get to your questions. So that's the really important disclaimer that goes up at the outset of every broadcast, because what it says is we don't know anything about your particular investment objectives, financial situation, or needs. And so, what we think are great ideas and free financial information, it may not be appropriate for you because your circumstances and situation is going to be unique.
Yeah.
And we can't assess that. So, before acting upon anything we say, we always strongly recommend you get the appropriate professional advice. Now, with that out of the way, two ways to ask a question. This is about your opportunity to question the luminary. Is that right? Luminary? Peter Switzer?
Yeah.
Uh,
There's a person who's allegedly smart would be called a luminary.
right. Okay.
Mm.
Uh, you could, of course, use the two ways. You could use the Q&A box and you can type the question in, or if you're happy to talk to us, you got a microphone in whatever device you're using. We'll come around and unmute you. And just click on the raise your hand icon and we'll unmute you and you can talk to us. We had up there, I think, a chart of Linus. That followed a little bit of movement today, but also allegedly the trade deal between the US and China.
Yeah, well, I always say US and Trump. That's right, Trump and China.
Right.
I don't think the US got much to say in it. It's Donald Trump's big idea, but as you can see, it's a reasonable fall, and the reason is, and the headline I saw was, China's agreed to give America, I think, nearly first say at critical minerals, or we're certainly going to have access to critical minerals, and that was one reason why Linus had a really nice rise recently. I'll just see what the actual movement is today. Can we see it there?
We're actually up a little bit today. We had the fall yesterday in Linus, but yeah.
Okay. It says down 5.3%.
Yeah, and it actually relates to our first question from
Yeah.
Chris. He says, "Hi guys, with the news out of the US about rare earths, would you be buying Linus?" So just go back to the sort of the medium
Yeah.
term, slightly longer
Yeah.
view of Linus. It's certainly a volatile stock. I mean, yeah, I mean, I probably would just pause now, but because it seems like that, the threat of withholding rare earths, the impact on the European automobile industry,
Yeah.
the other stuff they've had to talk through,
Mm.
you have to expect that Trump's not. It's going to be a pretty strictly negotiating point, but
Yeah.
it may not be creating the opportunity for others that
Yeah.
perhaps why Linus shot up on it.
Yeah, I think looking at the target price here, from FN Arena, it's $8.14, and today it's $8.60, isn't it? $8.60. So they see it going down. Paul, I think the message from that chart is every time the market wants to clobber Linus, it's a great time to buy. Look at every dip has been a worthwhile buy, and the uptrend over the last, last year or so, 2 years maybe, a year and a half, has been good if you've stuck to that strategy. I think it's a good company, but there's just so many variables. What China's gonna do, the battles between the US and China. But, if market wants to sell it off big time, I don't think it's a big enough sell-off for me to add to my holding of Linus, and we do hold Linus in our super fund. But I think it's definitely a buy when there's a decent sell-off.
Okay, so I think Ken, I think I've now got your questions. Two stocks that I'd appreciate your thoughts on. He's asking about Amcor and Aurora. We were talking about Aurora before. Let's go to Amcor first.
Yep.
Amcor's sort of been in a little bit of a downtrend the last few months or so. I'm not quite sure why. It's partly, I guess, because of its acquisition that it's making in the US. I think that I'm a fan of Amcor.
I reckon it's been down. It's been down, and I think it's probably a buying opportunity. I got 6 months ago, I was dumping Amcor. I just basically thought it was a boring stock, wasn't going to go anywhere. And the market has clobbered it, see? Well, I think
It's come off a little bit. Yeah, it's come
Yeah.
off from about 16. It came off on the news of a purchase in the US.
Yeah.
Quite a big size acquisition, right?
I think it's now
Yep.
a buy, Paul. And so the analysts are 1, 2, 3, 4, 5, 7 out of 7 like it. The most optimistic is Morgan Stanley up 45. Macquarie says 30.
What's their target price?
Target price is $17.23. And it pays a reasonable dividend as well.
Pays a really, Frankie, it's yielding about 4.5%. Quite, it pays a quarterly dividend because it's based in the US.
Yeah.
Well, most of its business is in the US. 90% is down in the
So
US.
Trump's not going to hurt it, really.
Trump's not going to hurt it. I don't sort of understand why it's come off a little bit. It's one of those stocks has gone out of favor a little bit. I mean, the market seems to really like brambles, which surprised me.
Yeah,
It's
so
not
really
a
well.
bit soft in Amcor, and I'm not really sure why. Other question you ask is Aurora, which of course was a spin out of Amcor
Yeah,
about I won't say a decade ago, but it might have been. It was a long time ago.
Yeah.
It's been in the doldrums.
Me to think about it.
And one of the reasons it's been in the doldrums is that its acquisition about a year ago, 2 years ago of
The bottle cap company.
I think it's a bottle cap company. I'm just trying to think it's a European company, has not worked out very well. I had the name in my mind a minute ago and I've lost it.
Yeah.
But let's have Aurora. It's certainly been struggling around the $2 mark for a while.
Yeah. And the analysts really like it. But I just discovered it by accident this morning when I was just looking around for buying opportunities. 19.9, because for it 20% upside is a consensus view. 6 out of 6 like it. Most optimistic is Macquarie up 30.6%. Like, both of those are good, solid companies to put in your portfolio, particularly at the current low prices. I wouldn't have liked them. I didn't like them at higher prices. But it seems to me, if I was putting together a portfolio now for somebody, I wouldn't be unhappy putting them in there as sort of solid, dividend-paying, good quality companies.
Yeah, my sense you might have to be patient. I like the trouble of buying any sort of industrial company. We don't have too many industrials in Australia, and this is actually in the material sector, but it is really industrial.
Yeah, really industrial.
Again, it's about half its operations are now outside Australia. So.
Yeah. Dividend yield for 5.2 and 5.4. 5.2 this year, 5.4. So in a time when anyone is looking for income, it's probably going to be a bit scooped up by a few income.
Yeah, I mean, you're just gonna have to be really patient because it's not a flavor of the month stock, right? There aren't big institutions out there taking big positions in Aurora, so you just have to be patient. Okay, now a question on Paladin. We're into the uranium, so good afternoon, gents. Paladin, aim for the lights, but hit the foot instead. Uranium price, mining delays in Namibia, hold or maybe switch to Boss Energy. I know I can say I prefer Boss Energy to Paladin, but
Why is that for?
I think it's mainly because of there's the issues as he's talking about in Namibia and some of the other sort of country risks that you're taking on. Both have got a bit of country risk with them, but it's always a bit tricky when you've got a lot of operations in
I agree.
developing countries, right?
Yeah.
Particularly in Africa.
Yeah.
That's just something you got to be careful about. The uranium hype, it comes and goes. I don't know. I don't. I think it's.
You think there's too many curveballs?
I think a lot of curveballs. Yeah.
Economic.
Now, just on the screen in front of you, I think we've got Paladin in the blue and Boss Energy in the red.
Yeah.
And they started at the same basis, and you can see the outperformance of Boss Energy over the last couple of months.
And I'm going to say, our regular watchers should know that for at least the last 6 months, Jimbo Liu has always liked Boss over Paladin. I think they're both good buys, but you know what? At the moment, Boss's consensus is 8% up, and 3 out of 7 don't like the company at this price. Where on the other hand, Paladin is a 30% upside pull. And I think 6 out of 7 like the stock. So they've got a little bit more support. But primarily because the price is low. I think both of them are in on a 3-year period. Yes, only one only one analyst doesn't like it. Is down 11%. But like, what's Macquarie? Macquarie's got a 30% rise for Paladin, UBS 40, Ordinate 46. I look, to me, these are buys for the future, and I think they'll eventually benefit from the desire to not use fossil fuels, but it's going to take time.
This one's from Chris. Hi guys, would you be buyers of GQG at these levels? Probably my initial answer is going to be no, but let's have a look at the chart and also what the analysts say.
It's funny that you asked this question, because the analysts do like it. All right, the analysts do like it. Paul, up 30%. And you know what? This week these guys actually said that maybe there's better buying opportunity outside the US. Now, a lot of people might not understand that GQG is actually, I think it's a Miami company that listed here in Australia. Yes, the answer is yes.
You might be right.
Yeah, I am
Yep.
right. Yeah, I might be right. I might be wrong.
I'm not saying you're wrong. I don't know, right?
No, but that was a really sensible move for them, because they're listed here. Their company actually gets a lot of attention for the funds that they have in their stable. But you know what I did on the weekend, because GQG's got a good track record, but so has WQG or WCQM, which we have a relationship with, and the performance difference is very little. Both are very good companies, and so I looked up GQG, and the analysts really like it, but the analysts don't cover WQG.
Well, remember, this one is you're buying the fund manager as opposed to the fund.
Exactly. Yeah.
So
And that can be a bit tricky, Paul, can't it?
that could be a bit tricky. I mean,
I'm sure there's that agility.
a lot of people have been very burnt on buying fund managers.
Yeah.
So I would caution buying a fund manager. I think the most important data you need to look at is the funds inflow. If they're growing, they're going to make more money.
Yeah.
If they're not growing, or they're getting funds outflow, then it's a warning sign. Though most fund managers publish that every month.
Yep.
You can see the ASX announcement. Look at the funds inflow on that graph. Doesn't give me a lot of confidence to want to go and buy it. Right? I mean, there's a lot of hype about fund managers. So this is not, you're not investing, you are buying the manager. The manager's business is out of people like you and I investing.
Yeah.
And, when you've got big inflows from financial planners, some financial planner groups, occasionally think they need to add value to their clients and they move their clients out.
Yeah.
No, they run away.
Yeah. Look,
and then
WQG against that?
Yeah. Well, I don't know whether you should, Pete, because you're not comparing like with like.
No.
So,
But they're both listed. You're right. They're not comparing like with like. But I think both have had very good track record. And by the way, GQG pays a very good dividend, Paul. Did you know that? That's quite surprising.
Well, yep, okay.
Have a look here.
Yep.
Am I reading this wrong?
I can't see on the screen. So,
Paul, you.
yeah, we're going to move on, Pete. That's GQG. Let's go back to Main Pharmaceutical with Bruce. He says, what are the prospects with Main Pharmaceutical, which I think is MYN from memory, isn't it? I haven't looked at Main for a long time.
Main. Yeah.
It's been a bit out of love.
Yeah, and I can remember writing something about that.
We've had an offer, we've had that sort of graph.
Did the company offering then pull out, and Main is sort of taking legal action against them?
Yeah, it's not a company I follow closely.
Yeah,
so.
but I think there was a big story.
Yep.
Yeah.
Well, there obviously been an offer and it's fallen through.
Yeah, exactly right. And I think Main's taken the bidder for taking legal action against them because it's unjustified or something like that.
Right.
Yeah.
Okay. All right. Do we have an analyst on Main Pharmaceutical?
Yeah, hang on. See.
I don't think it's widely covered.
Okay, here we go. Don't think so, Paul. Yeah, no, analyst covers it.
Okay, big question from David. Hi, gents. Your opinion on the ASX currently, please. Time to reduce. In other words,
Yeah.
ASX, Australian share market, like Wall Street, just off its all-time high. Had a good run, a really surprising run. Very, very strong V, if you look at that.
Yeah.
What do you feel, Pete?
Look, if America had a normal politician running the country, I'm not saying that, well, he's abnormal. Let's just face it. Everything he does is not like a politician. It's Donald Trump. I would be comfortable that falling interest rates, artificial intelligence, maybe some other regulatory changes a Republican president might put in would be all good for the stock market. And I would say I see it grinding higher. I think it will go higher, but I think we're going to see volatility because, okay, let's imagine he sorts out China. That's going to be great for the market. He's still got to deal with the EU, South Korea as well. Yeah, so I think there's going to be volatility. I'm happy
But
to
still, you can do also that these policy may not do anything for it, right?
Yeah.
Like, chances are all they will do is just inspire
Inflation.
inflation, right?
Yeah, and they'll have riots all around the country. That's what I'm saying. It makes it harder, but like for our financial planning clients, I'm not turning tail and going very defensive, but I am actually taking some growth that would be fantastic, taking profit and buying more defensive stocks. That's because I'm not as exuberant as I used to be. But I do think in Australia,
So that's pretty rare for
that's quite
a Switzer not to be exuberant.
as over. Exactly. But I do also say this. If you believe the chief economists who all think there's 3 more rate cuts coming, that's going to be good for a whole lot of companies that suffered high interest rates. That's one of the reasons why I've liked X20, which continues to do pretty well. And I do think, CBA is not going to keep rising forever, but we've been wrong on that one.
Yeah, no, look, I'm not nowhere near as I'm not exuberant about the market at all. In fact, I start to think I've got it wrong. In other words, because I've been a bit bearish of late, mainly because not taking money out,
Yeah.
but just because I just feel this is all overdone. But it does show you, I guess, the one that's really surprised me is the way the US keeps moving up most nights, right?
Yeah.
Yeah, and it does show you the power of the thought about lower interest rates there, and the thought about what AI is going to mean for the cost base of a lot of these companies. There's, I think there's more and more stuff coming on this, but if we look at it, they could really change the cost dynamics
Yeah.
for a lot of businesses.
Paul, it kind of straight. If Liberation Day had never happened, we wouldn't have that V-shaped thing, a graph we're looking at, and we would have probably seen America just gradually going up higher on lower interest rates and artificial intelligence, and the promise that Trump had that he'll go for deregulation and lower taxes. So that's the big underpinnings. But then tariffs scared the pants off people, and now I think we're adjusting to it, but we're still uncertain. So
Yeah, so it is a hard market. I look, I'm not a buyer at these levels, right? I just think you've just got to be patient, and but I'm not massively cashing in the portfolio either, right? It's sometimes you don't pick tops, and sometimes you feel you don't want to add it to it, and you still you don't lose money by just having some money in cash for a while,
no.
right?
But
It's sort of
what
like-
I've been doing so for some of our clients, Paul, is I've just taken a little bit off JB Hi-Fi, a little bit off CBA,
a little bit off Westphal.
yes, and those top 20 ones, and been putting a little bit more into X20 for I think the future growth, but also going to TDs or other defensive ones as well. So I am taking a bit of insurance, but I'm definitely not turning tail and running like a coward.
Okay, this is a question from Ken about Lendlease. Used to be a darling of the market. It's been absolutely creamed. New CEO, new strategy. I think it started to recover a little bit in price, but you should know what the analyst. It's not a stock. We used to very widely held on a retail basis, Lendlease.
You used to be a big fan.
I used to be a big fan of Lendlease, but let's have a look at LLC.
Yep. Up 21.5%.
So you can see there, that's the picture over, just over. If I went over 5 years, it would look even worse.
Yeah.
Let's just go over 5-year chart. That's the 5-year chart in Lendlease.
A nice little bounce, Paul. No.
He's looking at the 5-year chart.
Yeah, but I'm saying that
Yeah.
it looks like it's trying to build a base.
Well, let's
Look,
let's go to the 1-year chart.
Yeah.
So it does look like it's built a base. This
Mm.
is the impact of the new CEO.
Yeah.
Maybe Lend-Lease is sort of might starting to win a bit more favour.
Yeah, look, I gotta say, a mate of mine's in Treasury there. He's a really smart guy. You know, ex Macquarie and other places. So I'm not surprised that there's a bit of improvement. Paul, 5 out of 5 analysts like it, and the consensus rise is about 20%. So it's probably is on the turn. I remember
It'll help with lower interest rates.
That's right.
It's a stock, although it doesn't. It's more a portfolio manager and a developer that sells stuff. Lower interest rates will help that whole sector. So it's worth maybe it's worth. Once was considered to be blue chip company in Australia. It's
they're not blue anymore.
But I'm not saying it's
Not
blue
really.
yet,
Guys are
but it's worthwhile maybe portfolio plays having a look at that.
Yeah,
as
guys, I
a
tell you.
tip.
Yeah,
Okay, let's go to the phones, and Craig's on the phone. Yeah, Craig, you're unmuted, so go ahead.
Yeah, g'day guys. Just wanted to get your thoughts around the Global X Defence ETF, or do you have any views on any other stocks that are that we can look at or invest in regarding the defence? Thanks.
Yeah, I think from what I understand, because I think Tony
yeah, the
Featherstone wrote about this just a couple of weeks back. It might have been.
Did you see it, Craig? Did you see that one?
Yes, I did, mate. Yeah, I did.
Yeah. So he describes the ETF in detail. Look, it uses a fairly formulaic approach to work out what are the so-called defensive stocks. So they're not interested. You're not going into, debt. You're going debt or bonds. You're going into stocks that have defensive characteristics.
But can I just clarify with Craig? Craig, are you saying defense as in military type stuff?
Oh, sorry, global defense.
Yes, no, I'm talking about military.
He did write about that. Yep.
Because Craig's a keyword.
Yeah.
And it barracks for the All Blacks. And yeah, you need defense against the All Blacks. You know that. Don't you? All right, mate. It's a good question. I don't think we really studied it. One important piece of information I got this week, Craig, is
well, I think it's a thematic play. There aren't any defense stocks in Australia,
no,
right? So
external.
We'll have a look at it, right? So there aren't. It's a lot of companies. The French company, not Tails, Callis. Lockheed Martin's going to be there. All the other big manufacturers, right? Obviously, it's
does Nobel still have a because the Nobel Prize, he was
probably dynamite
guy, wasn't it?
I forgot it's only become on the market a little bit longer. But obviously the thematic is, globally, and it's really taken its lead from what's happened in Europe with Europe agreeing to commit to over time to build up defense.
So wasn't that a great time to buy when Trump put Liberation Day tariffs? Big drop, and then look at the bounce back since then.
Craig, I think to answer your question, I don't know what the more upside is. I mean, I think the news that everyone's going to being encouraged to invest in defense is out. The translation of that into dollars, I think is going to might be a little more challenging. Particularly it's one thing for everyone to say, well, let's now target defense spending of 3% of GDP or 3.5%. But that's a huge shift of either increased taxes or reduction in cuts to pay for it.
And remember, what Trump wants to do is see us and others spend more, and he'll spend less.
Yeah.
So there's not necessarily a massive improvement in this.
I don't know whether all the hype on that is out. I mean, and because clearly that's been a lot of people have allocated money to defense stocks on the expectation that you're going to see this long-term thematic play out. And I think it's really hard to judge where you are in the sort of, I won't say the hype cycle, but where that is at the moment. My guess is a lot of this is probably already played out. You have to start to see the runs on the board, but
certainly LA riots would be good for people who are hoping on more problems in the world. But Craig, do you really want to invest money and sit at home and pray for World War III. Is that is that the consequence of going long defence? It's interesting, isn't it?
No, I don't want to see that.
No, I
Uh, yeah, I just thought that with everything that's happening around the world at the moment, you just like look what's happening in Iran at the moment as well. The euros are coming up.
That's right. Those rights could extend right around the US. Who knows where it's going? But I think that chart sort of shows you there's already been a pretty substantial rise. But it's a good thought. Well, I think we should investigate.
Anyhow, we'll have a look, Craig. I probably would be just a little wary. I mean, I think I'm probably now too late into it, would be my guess. But sometimes these cycles, sometimes these cycles just continue to go on a lot longer than you expect.
Yeah.
Okay, let's move on. So just to follow up on the previous question, just back to Lend Lease. I think if I own Lend Lease, I'd now hang on based on what I'm saying. If that answers your question, Ken.
Yeah.
I think you probably got to sort of
Lower interest rates will help, and I think the new team is better. And I think the market's respect of that shows up in that chart.
Yeah, okay. So anonymous, well, sorry, not anonymous, it just means they haven't got their name on their screen. Good afternoon, gents. What do you think about Treasury Wine Estates, which I have been a fan of, but Jesus has been doing it tough. The market does not seem to like it. It was a $13 company, now $8. This is a sell. They recently came last week. They announced a slight downgrade to earnings guidance, and also that one of their distributors had disappeared. I still think it's a really solid company.
Yeah.
And it's at $8. I wouldn't be a seller.
No, and I think if I wouldn't mind buying TW. I know I sold at higher levels for other reasons, but at $8, Paul, I think it's a buy. So do the analysts. 23% is the consensus view. The 5 out of 5 like it. UBS says 47% up. Macquarie says 9. Morgan's 35. Look, it fits another quality company put into a portfolio, and you hope over time it achieves its form of glory. And I think the products are great with TWE. The problem is, as you made a point earlier, young people aren't drinking enough wine.
Yeah, we're going to get young people to drink wine, and that's
Responsibly.
Yep. So that's fighting against it. In the US, it's 19 Crimes brand, which is it's sort of non-premium, is struggling a little bit.
Yeah.
Lost a distributor. I think the acquisition it made there about 12, 18 months ago is solid, but it is, and you've got the sort of tariff thing sort of negative.
Positive for TWA. That's a good point.
But look, yeah, I mean, there wasn't a big downgrade. I probably wouldn't abandon TWE.
No.
We've got clients who've got TWE, and I don't think it's in the sell category.
Yeah.
Okay, final question. What about ASB, which is Austal? Let's have a look at
It's been
Austal.
company over the years, hasn't it, Hostel?
Look at that chart of late. I hadn't really picked up on.
They've probably picked up some defence contracts, Paul. I've got a funny feeling they have for some reason. But yeah, the analysts say 21% downside, and that's because the gains have been unbelievable. No one sees the share price going up from here.
Yeah, I mean, look, you'll be a little bit careful with these analyst forecasts. Remember, if a share price accelerates quickly like that, then obviously these things change a bit, and so
yeah. But it's been a big solid rise, Paul. Right?
Yeah, and that's benefited from all the thematic we discussed earlier. So, look, do you get in now? I guess I'm a bit of a nervous Nelly on that stuff, and I wouldn't. But
I wouldn't either.
If you held it, do you just hang on for the ride? You probably do, right? Maybe do a little bit of take a few profits, but the thematic, it's a very, very strong, very steep V, and that last little rally up in the last.
Luke, give us long term. Be good to see us long term. It's a great buy the dip, but that's a big rise.
That's a big rise, yeah. So
it's probably worth a bit of investigation. Yeah, why it has done so well.
Okay, that's Austal. All right, now we're out of time, Pete. Now, just tonight we've got the PPI in the US. I think a fairly subdued weekend too.
Yeah, the CPI did very well. It's interesting, Paul. A good CPI could imply a slowing economy, and that's going to be the next debate. They're going to be looking at the next jobs number, the next GDP number. It's just uncertainty Trump style, which gives me plenty to write about, but it does make it harder to be confident about investments. But as I say, I do think lower interest rates are going to help a lot of our stocks.
Okay, we're out of time, folks. We'll be back at the same time, same channel next Thursday. We'll see you then.
Yeah. See you then.